Good morning, Paul Georgie from Allendale. It's July 27, 2010. The markets this morning, grain markets, looks like we're going to be higher pretty much across the board. We started out weaker last night and was down 3 to 4 cents, led by the wheat market, and then starting here about 5:30 this morning, we started to see some strength come into the market, and fund buying from around the world helped push this wheat market higher. And also the big focus today is weather. We've got Russia news, heat, dryness, all of this, the problems that we're seeing in Russia is causing some support to the wheat market here this morning. Outside markets are also providing support this morning. We've got the dollar down 17, crude oil up 46, the stock market up 58. Continuing strength there is certainly providing some positive attitude to commodity investors, and that is helping us out pretty much across the board today. The corn market, USDA came out with their weekly crop progress conditions report, put the corn at 72% good to excellent, stayed right in that range where we were last week. Some traders were expecting an improvement, so they're using that as a talking point here this morning. But bottom line is we still got an excellent corn crop, 72% good to excellent versus 70% a year ago when we had a record yield. So that's going to be continued talked about. The question is going to be, how big of a yield do we have? Allendale's research is suggesting we could see a larger yield than trend yield because of all the positives and the excellent weather conditions we got. Weather is another factor we're talking about here in the U.S. today, but doesn't have much of an impact. It's ideal in most areas. We've got some rain. We've got more rain coming. The temperatures aren't as hot as what was earlier expected. So those are things that are the negatives and what's keeping the pressure on the corn and soybean market, as we seen yesterday. The technical support in the corn right now, December contract comes in around 370.5. Resistance here today is going to be around 382.5. In the soybeans, again, fund selling yesterday. They've been following the wheat market, and wheat, I'm sure, will be taking the lead here today, and that's what's given traders some confidence to buy the corn and beans here overnight, is the strength in the wheat. But specifically in November beans, we've got technical support there at 961, then all the way down at 933, resistance at 975 3/4, and at 993. In the September wheat contracts, technically we've got good support there at 572.5. That's kind of a number that we're watching very closely. If we close below that level, we'll probably see a lot more stops being hit, and we could see a sharp break in this wheat market. But as long as we hold that 572.5 area, the trend still points up, and it looks like the resistance is the least path of resistance. Over in the cattle trade, the bids, futures market, first of all, was lower yesterday after a somewhat positive cattle on feed report and inventory report, which doesn't surprise cattle traders very much because it seems like you fade that report the first day. However, cutout values were a little lower yesterday. The weather has subsided, so we don't have as much heat in the cattle feeding areas, so the gains can improve. However, technically, if we can see any kind of firmness here today, the cash market may lead us out of here. The offers right now are 95, 96, looking for some bids to come out of Texas at this point. Haven't heard anything. So looks like we should be steady here today. However, product continues to be weak. We are in that time period right now. It's called the dog days of summer in most cases, and that is when we got a lot of people on traveling. It's hot. We don't eat as much beef. We need to wait here for the first week or two of August, where we do get some institutional buying, and that should help out this product somewhat. Over in the hogs, sharp break yesterday. Again, strong technical close on Friday. Things looked great, and then we pulled the rug on us yesterday with a lot of selling. However, we did see product extremely strong yesterday, up 148. This morning, cash markets are steady to firm. Packers seem to have enough hogs around them. There's several packers going to be dark this week. A couple of them today, some on Friday. So this the demand and the supply seems to be balanced there. Technically, we need to rebound the hogs here and turn this market back higher, where we've got support at 80.05 and then again at 79.05, resistance all the way up at that 83.30 level. And we expect the August contract to stay in this trading range between 80 and 83 as we go into the last couple of weeks of trading there in the August contract. If you got any questions, give us a call here at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.